Hey everyone, and welcome back to the Deep Dive. In a world that moves so fast with all the headlines and the buzzwords, sometimes it's easy to forget what really matters for long-term investing success. So today, we want to cut through some of that noise. We're going to dig into something called value investing. It's a phrase we hear all the time, right? But what does it actually fundamentally mean? Our sources suggest it's maybe simpler at its core than all the talk around it implies, but also maybe more profound. Let's unpack it.
Yeah, absolutely. And what's really striking when you look at the sources is that fundamentally this whole strategy is a bet. It's a bet that the market isn't always efficient. The idea that the price you see on the screen, it often disconnects from the actual underlying value of the thing itself.
Okay, so price and value aren't always the same thing. That's the core idea.
Exactly. The market gets driven by emotion, right? By trends, by panic sometimes, and it misprices things. So a value investor, folks like Benjamin Graham, Warren Buffett are the big names here. They believe that if you can figure out a company's real worth, its intrinsic value, you can actually benefit from those temporary market mistakes.
Right. So it's not just scanning for stocks that look, cheap. It's deeper. It sounds like it requires this real conviction that sometimes the crowd just gets it wrong, or at least isn't looking far enough ahead.
That's a great way to put it. Conviction is key.
So how do the sources talk about figuring out that intrinsic value? It sounds like more than just glancing at a PE ratio or something.
Oh, definitely. Yeah, Intrinsic value isn't a number you just find printed somewhere. Our sources really emphasize it's the economic worth of the business. You get there through some serious analysis. You're looking at future cash flows, what assets it owns, how much debt it has, and crucially, its long-term competitive edge. You often hear that called a moat.
A moat, okay, like protecting its business.
Yeah, exactly. Think about it like this. If you were going to buy the entire company, not just one share, what would you look at? You'd look at everything, right? Management quality, its position in the market, its products, all that stuff. That's what goes into figuring out intrinsic value.
Okay, that makes sense. It's a much deeper dive. Which brings us to the how, I guess. Or maybe the challenges. If it needs that much analysis and this kind of contrarian thinking, what makes it so hard to actually do it? Especially today, markets move so fast. It can't be easy standing your ground when maybe everyone else seems to be piling into something else.
No, it's definitely not easy. And the source is pretty clear on this. It takes enormous patience and real intellectual independence. The market might just completely ignore your brilliant analysis for years sometimes. So you could be sitting on a stock, is underpriced while everyone else is chasing the hot new thing. It's about waiting.
Yeah.
And resisting that pull to just follow the herd.
Waiting it out. That requires discipline.
It really does. And it brings up a question for anyone listening, right? Are you prepared for that kind of patience? To be contrarian?
Yeah.
Or, do you find yourself easily swayed by the day-to-day market chatter?
Yeah, that's a really good point to reflect on. So, okay, let's tie this together then. Value investing. It's this pursuit, really, finding assets where the market price right now is less than what they're truly worth underneath. And this idea, which sounds simple, our sources show it's really the foundation for a whole major approach to investing. And it's still incredibly relevant, even now.
Absolutely. The core principle endures.
So thinking about this, what does it all mean for you listening right now? Well, it suggests that maybe the real value, it often lies beneath the surface, beyond the daily headlines and the market swings. It's about maybe developing that discipline, that ability to see past the immediate picture, to the enduring strength or lack thereof in a business. So here's something to think about. Given this fundamental idea, price versus value, how does that change how you think about a stock being underpriced? Or what intrinsic value might mean in your own view? Does it make you look at market news differently? Lots to consider there. Thanks for joining us on this deep dive.